Good morning, everyone. Welcome to Commodity Research Club and our live show, Commodity Weekly Outlook. Where we explore everything from bullion, energy, and base metals. So the today's session agenda is commodity analysis, where we're going to do the fundamental and technical both. We are going to cover. So let's quickly start with the fundamentals. About gold market dynamics on Saturday, U.S. President Donald Trump has imposed 25% tariff on Canada and Mexico and 10% tariff on China effectively from this Tuesday. He justified the move as necessary to combat illegal immigration and drug trade issues. So, in response, Canada and Mexico announced retaliatory tariffs on US goods, while China moved to challenge the US at the WTO. And also, the Trump tariff sparked the trade war, causing negative reaction in US Asian markets. So, amid panic situation, investor turned into US dollar for safety, and also selling off some gold despite its recent record high. If China retaliate further, just a second. If China retaliate further, gold prices could regain support due to concern over a global trade war and its effects on growth and inflation. Since Trump trade policies are seen as inflammatory, they may eventually boost gold as a traditional inflation hedge. So traders are also watching key events like US manufacturing PMI on Monday and speeches from Federal Reserve officials for further guidance. Meanwhile, weak China manufacturing PMI data has added the market boom. Let's come to energy update. Oil prices jumped on Monday after US Presidential Donald Trump imposed tariff on Canada, Mexico, and China, sparking fear of trade war and its impact on crude supply. So the tariff includes 10% duty on Canadian energy product and 25% duty on Mexican energy imports, which could increase cost for US refineries that depends on heavy crude, reducing profitability and production. Also, the experts believe that this could give European and Asian refineries a competitive advantage. Last week crude oil prices fell, with WTI crude closing around 72.73, down by 2.85%. And the drop was caused by rising US stockpile, weaker global demand, and the trade concern. The EII reported a 3.5 million barrel increase in crude oil inventories, ending a 9-week declines. Also, the winter storm slowed refinery operations, adding to the supply gap. So China PMI fell to below 50, that is the lowest in 5 months, indicating reduced industry demand. Also, the strict policy on Chinese refineries and US sanctions on Russia crude further weakened global demand, keeping oil price under pressure. Let's come to base metal. Last week performance of the copper was down by 3% and aluminium was down by 2%. LME metals decline as the president tariff treat is 25% on Canada, Mexico, and 10% on China, and also 100% on BRIC nations, excluding USD, which fueled fear of inflations and market uncertainty. And also India's duty reduction on scrap, new duties as per in copper and brass it is 0%, which was 2.5%. Also for tin, lead, and zinc scrap it is now 0%, which was 5% earlier, which impacted cheaper imports may lower metal prices, which is going to benefit the manufacturing sector. However, it could hurt the local recycler and producer facing increased competition. So that's what's all about the fundamental for this week. We are going to see the technical. I'm going to share my charts with you all. Just a second. Hope my screen is visible to everyone. We are going to check the gold chart. So gold has given the breakout from here. Like earlier, I have shown you it has formed the ascending triangle pattern and it has given a breakout. And my first target was coming around 83,500, which almost reached around 83,360 level. Since like it is on uncharted territory, gold, so we can expect it more upside move. You can see downside there is a good support near this level 80,200. So above 80,200 there is an expectation it's going to continue the upside rally, right? And downside below 80,200 only we can expect some downside momentum. Let's see silver. Silver is trading in this downside falling channel, right? And it is struggling near the up, the upper band of this channel, which is coming around 82,500. And but it is supported by moving averages. Like blue color line is a 21 days moving average. It is supporting a lot. So in silver, you can expect this week some sideways momentum and breakout above 83 in a 92 300. We can expect more upside movement if suppose volumes increases from this level and there is a breakout of this upside channel. So we can see the upside move up to 96,000 also, right? But downside, it is supported by moving averages around 91, 800, 90, 700, and even 89, 100, which is a very good support in silver. So we can expect some sideways to upside movement in silver. Let's come to copper. Copper is actually dried by volume, but since it is not supported much, and it did not it did not respected the 200 DMA, which is around 829 level. So below that, we can expect sideways to downside movement only. But downside, there is a very strong support. It is taking near 818 and 820 level. So below that only we can expect some more downside momentum. Otherwise, it can see the sideways momentum near 818 and upside 830. Okay, so it is awaited by some volumes copper, and a very strong support comes near 818 and 820 where we can expect some upside move, and again breakout above 830s should be waited to see the further upside movement of 836 to 842. Okay, we'll see the natural gas. Natural gas has today it has beautifully respected the 100 days moving average, which is coming around 265 levels, and it has given a gap up opening. And sure, like it has a very good support near this level. Upside, it can even come to even can see this level around 300. And since fundamentals are also supporting, we can sure see the breakout above 300 levels if it is supported near, if 280 levels, 275 levels shows a strong support, right? So here we can expect an upside rally, and about 300 we can expect a more upside move up to 320 also, right? Okay. So that's all for this week update. Thank you for being a part of this week commodity sessions, and we appreciate your engagement and hope these insight is informative and helpful to you. Stay connected for more updates in our future session. Wishing you a great week ahead. Thank you.
In securities market are subject to market risks. Read all the related documents carefully before investing.